Hey, what's going up, Bull Runners? Welcome back to the channel. Ryan Huggins here, aka Win with Ryan. Now, imagine waking up on Monday morning and you're finding your favorite meme coins and underdogs like Dogecoin and XRP suddenly backed by Wall Street giants. Easy to buy, no hassle. Right as the whole crypto world teeters on the edge of a brutal market dip, that's already wiped out nearly $800 billion from Bitcoin's peak. But here's the twist. While panic sellers bail out, this could be quite the signal for a rebound, pulling everyday investors back in before the next leg explodes. Stick around. Today's news might just be the map out of this storm, and we're breaking it all down fast before you miss the move. Plus, we're going to head over to X, find out the breaking news in the crypto world today. Grayscale is poised to launch its XRP and Dogecoin ETF on Monday. Scary scenario for Cardano. They suffered a temporary chain split. We'll tell you more about that. Coinbase crypto exchange executes internal wallet exchange. And we will be jumping into XRP in the charts. We're going to be taking a look at our spider lines for XRP. We're going to look at very important levels of support and resistance that you need to know about right now. Plus, we'll look at short-term and long-term momentum and so much more in today's video. So if you're like most people where you don't have the opportunity to spend hours a day doing crypto research, well, that is what we do for you on this channel every single day. So make sure you subscribe right now. And if you are still feeling bullish about this current bull run, let us know by commenting 777 down below. First up, we're going to head over to CoinMarketCap, check the overall pulse on the crypto market today. We are currently trading at $2.94 trillion total market cap, which is up 1.46%. Fear and greed is at 10 out of 100 in extreme fear. We also have 24 out of 100 on the altcoin season index. So we are in full on Bitcoin season, meaning that altcoins are not performing well versus Bitcoin as of right now. As we take a look here, we've had $100 billion worth of trading volume in the last 24 hours, and we very likely could have hit a bottom on the total crypto market cap at 2.8 trillion. Bitcoin dominance coming in at 58.4%. Final numbers for the Bitcoin ETF net flow came in for Friday, a very positive day, actually, $238 million worth of inflows, but ending the week at a terrible negative $1.2 billion worth of outflows. Ethereum also having a decent end of the week at $55 million worth of inflows. So we may see, a lot of people are talking about, did we find a bottom? As we see right here, ending the week last week, though, at a $500 negative million worth of outflows. And expanding to our top 7 cryptos by total market cap now, because Solana has dropped so far. Bitcoin is number 1 at 86,000. We've got Ethereum at number 2 at 2,800, Tether at number 3 at $1, XRP at number 4 at $2.02, BNB at number 5 at $846, and USDC overtaking total market cap wise Solana as we take a look here only by $1 billion. So that could flip flop rather quickly. But as of right now, USDC is number 6 and Solana is all the way down at number 7 at $130. Heading over to X for the breaking news. Breaking news, CoinMarketCap has now listed the top 16 ISO 222 compliant crypto where XRP is included. Remember, XRP is a digital asset. RippleNet uses the ISO 222 as messaging layer, but XRP itself is not ISO 222 native by design. Now, a lot of people are battling it out big time on X right now about this scenario. In fact, if you're on X, just on the home screen here, Cointelegraph has a question, how low can XRP go? That literally just popped up on my feed. But what I was going to say is when you go to the search on X right now and you go to news, it is actually one of the top trending scenarios right now, RippleNet. And when you click on this and you go through, Swift completes its ISO 222 shift to global payments on November 22nd, 2025. Swift ended its transition to the ISO 222 standard on November 22nd, replacing older formats with structured data and senders, receivers, and purposes. The change boosts speed, transparency, and accuracy in cross-border payments handled by thousands of institutions. Crypto enthusiasts linked it to XRP and Ripple's compliant network, but Ripple's CTO and official sources clarified that the standard covers messaging, not assets themselves. The move aligns traditional finance with better data flows without direct boosts to any tokens. So right here, they're essentially saying XRP itself is not included. Ripple Net is what's included. But if you go down into the post down below and the trending posts for Ripple and XRP right now, Ripple is now part of the ISO 22 standards body. Ripple has been preparing for this exact moment with the global shift to ISO 222. Ripple is part of the standard committee and already enables payments for over 300 institutions. And it is very positive because this does have a lot to do with it. Now, the coin itself, not specifically, however, RippleNet does use XRP for the transfer of the liquidity. So when we're over here at CoinMarketCap, you can select more section here. You're going to scroll down to more categories. And then you're going to scroll down in the category section until you find the number 23 section here right now, ISO 222, and you're going to open it up. And currently, number 4, XRP, because it's total market cap rankings here, as we can see. And then number 16, Stellar. Number 21, HBAR. Then you have number 55, Algorand. You have 65, XDC Network. And then Quant and IOTA. So for those of you guys that are into the ISO 222 scenario as a whole, these would be the coins you want to take a look at. So on top of that positive news, whether it's the specific coin or not, it is the relation to the coin. So yes, it's official. ISO 222 is officially in progress and XRP is officially attached to it. So that is very positive news. And on top of that positive news, Grayscale is poised to debut its XRP and Dogecoin ETFs on Monday following New York Stock Exchange approvals. This is a huge, huge boost. We are seeing a little bit of progress already for the last 24 hours. XRP up 4.73%. It's back up above $2. And we will be getting into the charts here soon. We can't get super excited because all of the indicators are still flashing bearish. We have quite a ways to climb before we can start recovering into bullish. And I'll show you what I mean here shortly. But we do have great news. ISO 222. We have more ETFs. And don't forget, here is an ETF status update for you all. Canary Capital with their XRPC on NASDAQ is live. And it was launched November 13th. Then we have Bitwise XRP NYSE live as of November 20th. Then we have Grayscale GXRP on the New York Stock Exchange going Monday. Franklin Templeton, their approval starts on Monday as well, November 24th. Rex Osprey, it's already live early November. 21 shares is coming soon, next few days. So a quick summary here. 2 ETFs are already trading. Obviously, not a huge ton amount of volume coming in, but we also can look at the Bitcoin and the Ethereum ETF inflows, outflows. It's been extremely poor and negative. We've at least had positive inflows for the XRP ETFs during these launch days. In fact, it broke an all-time record for an opening day. XRP did. There's 2 more big ones, Grayscale and Franklin Templeton, starting on Monday. At least 5 to 9 more will be launching this upcoming week. Inflows are strong, but price is still stuck around, well, under $2.10. So fantastic news as far as XRP ETFs. Some not so fantastic news for a lot of us. When you came up in crypto, you bought XRP, you probably had some Cardano as well. They just suffered a major problem. The Cardano blockchain network suffered a temporary chain split on Friday due to an old software bug that triggered by an abnormal transaction. This malformed transaction exploited an old code bug that was underlying software library used by the Cardano blockchain, resulting in a network partition due to a disagreement in how nodes process the transaction, according to an incident report from Cardano ecosystem organization Intersect. The split has led to concerns about orphan transactions and potential ADA double spends that have caused economic damage to some users. Homer J AAA says, "Sorry, I know the word isn't enough given the impact of my actions. Cardano folks, it was me who endangered the network with my careless action yesterday evening. I started off as a, let's see if I can reproduce a bad transaction, personal challenge, and then I was dumb enough." The temporary split caused a debate within the Cardano community, with some arguing that Homer J's actions helped expose critical bugs, and others, like Cardano founder Charles Hoskinson, calling it an attack on Cardano network. Charles Hoskinson says the FBI is even investigating. Charles went on to say, "This kicked the hornet's nest, and in many jurisdictions, this is a felony, a very serious one. It's tampering with and damaging a digital network. Maybe it's S's and giggles, and they think it's just fun and games. Oh, look, we kicked Charles's toy. But these things impact lives, money, and commerce of millions of people. It's like trying to shut down an economy and conduct a cyber attack on a nation state. The price of ADA recorded a modest decline during and after the incident, dropping from 44 cents down to 40 cents at the time of this writing. Now, what we're also noticing, by the way, guys, if you remember the October 10th extreme liquidation day of all major cryptos across the board, well, we're seeing a big dip into those deep wicks. And a lot of people, even myself included, were calling this was going to happen. When you have a major drop into a scenario like this, it is almost like a fair value gap where it's the opposite, right? Where there's a giant body that needs to be filled. Well, giant wicks typically need to be filled at least to 50% as well. And we do know that all of these wicks have been filled at 50% or more on almost all cryptos. Also in the news, Coinbase crypto exchange executes internal wallet migration. They said this was a best practice in the industry to maintain cybersecurity standards. The migration is not due to any cybersecurity breaches or external threats, according to the announcement from the company. I know a lot of you guys out there use Coinbase. Now, Coinbase is a major institution and most people are safe. In fact, most of the companies that are doing their treasuries hold them in custody with Coinbase. But I did want to let you know there is a safer way to custody your crypto. And if you head over to Altcoin Pro Universe, there's a link down in the description. And just head over to our Ironclad Crypto Strategy. We talk about crypto wallets. We have a Crypto Wallets 101 course, teach you all about crypto wallets, what you should do with them, seed phrases, best practices. This is storing your crypto outside of a centralized exchange. We do have a ranking centralized crypto exchanges video here as well, why we are cautious with centralized exchanges, and the entire Ironclad crypto security workshop, and much more inside of our security classroom. You can come join that. We also have crypto foundations, building blocks, crypto security, Web3 navigation, diving into DeFi, technical analysis, altcoin research. We do also, in our community section, call out altcoin picks. You can come take a look at them if that's something that you like to do. And when we talk about altcoins in our community, it's not a pump and dump coin. We actually go through extreme evaluation of our coin thesis and why it's going to work. This is altcoin picks update plus meta shift. So if you want to know what the next meta for altcoins is, click that link down in the description. Get started with us today. But for those of you guys that are continuing to use Coinbase, I completely understand it's very simple to do, but they said that migrating wallets periodically is a well-accepted best practice as it minimizes long-term exposure to funds. This is a planned migration and unrelated to industry changes or price conditions. This is not in response to a data breach incident or external threat. Now, this is a little bit worrisome and got people freaking out because when you do look at the charts and we go, for example, to Bitcoin's price, and see how significantly far we have fallen, from 125 all the way down to 85, even dipping down into our final supply and demand zone box we have here before our ultimate support line. But we're in the 80s. So this is a possible bounce back to the upside. We'll take a look at this when we get to the charts here in a couple of minutes. But Coinbase mentioned this on their X account. In 30 minutes, Coinbase will begin a wallet migration. During this time, you may see large on-chain movements between Coinbase-controlled wallets to new Coinbase wallets. This is a planned and allows us to maintain the highest security standards in the industry. Coinbase did also warn users that during the migration, scammers may attempt to exploit the situation by impersonating Coinbase representatives and reaching out to customers, requesting login information or asking users to shift funds, which the exchange never does. And idle balances may be a honeypot for hackers, why periodically shifting funds is a best practice. Hackers target centralized servers, information systems, and hot crypto wallets, which are connected to the internet, to extract information and value from users. Threat actors may be compiling crypto public keys now until a sufficiently powerful quantum computer is invented. So I wanted to give you a heads up out there for your safety. If Coinbase is reaching out to you, more than likely there's not really a Coinbase representative trying to reach out to you there. All right, jumping over into the charts, we are going to cover this for Bitcoin real quick. Let's zoom out here. Now, as you remember, we did talk about these two supply and demand zones on the charts for Bitcoin. We had this level here that was at 86,000 or 85,561 to 83,000. And if it broke to that level, it's likely going to be dipping into this box here. And then we do also have our 1100 exponential moving average, which was continuing on this trajectory. So there was a possibility of it coming and bouncing off that as a support. Now, the reason we were worried about that, or I was worried about that, is because we broke below our 12-hour 1100 exponential moving average, but there was liquidity to be snatched up. And that is why it did go into those zones there. Because when we take a look at this same scenario on the 12-hour charts for XRP, for example, we didn't have as dramatic of a loss of the 12-hour 1100 yet. Now, is there a possibility that this is not a bottom and we are going to be diving deeper to the downside? Yes, for sure. But there's a couple of positive signs that I want to point out to you guys right now on the chart. So as we look at this, we're going to go to the spider lines chart specifically. And we talked about this weeks ago when it rejected off of our spider line here on the blue color, which was up at like the $2.60 range. We thought it would come back down and it needed to hold support at our spider line at 228. And if it lost that, there was a likelihood we'd be coming down to $1.90. Now, we even dipped a little deeper into the $80s here. And I was telling my friends that are real estate investors that I hang out with, I said, I'm going to be watching this $1.90 area as a potential area for reaccumulation. So what I'm seeing right now is the short-term wave has zeroed out. We've been talking about that now since it actually happened, which was all the way back on November 16th. We were waiting for this red to turn back to green. In fact, we had a little fake out here for one day. So we had this little blip to the upside and it immediately zeroed back out. So we can see that. Now, the reason that was not a really big action-taking scenario right here is because we didn't break above 25. We are now broken above the 25 on this, which is positive. But long-term momentum on the 12-hour, still deep into bear. So if I'm going to check this, I'm going to go to 4-hour, still bear, right? I need some positive flip to bull on our Wolfpack indicator. And if you want to look up the Wolfpack indicator on TradingView, these are the settings I use, the 10 and the 30. And when it's green, it means bullish. When it's red, it means bearish for the most part. Now, you're going to have to use some other confluences in there. But as we can see right now, our 4-hour bounced off nicely off our $1.90. And it did actually, this is very positive because it actually grabbed that extra liquidity below here and is moving up. Now, if I look at the hourly charts, boom, this is very positive for XRP. So as we can see right here, we have some short-term momentum actually finally in our favor. We have not been above the green line since November 18th. It did a quick dip for a couple of hours, right? And it didn't go anywhere. But as we see right here, it also did it here on November 16th. It did a quick blip above it, but it rejected off of our $2.28 line there. So we needed to break through that with a confirmation. So now we've gotten a nice rebound here. I'm looking for price to come back to these levels, and I'm going to be reevaluating it at $2.28. This could happen in the next 24 to 48 hours. Another thing that we talk about a lot on my channel, on my segment here, I don't like weekend pumps because typically when the markets open on Monday, they dump it all back, no matter how much we gained during those upflows. But right now, hourly looking strong. 4-hour, still super far away from me calling it strong. It is not strong. However, it has broken above the 10 exponential moving average, which is positive. It's rejecting off the 30 right now. So that bothers me significantly because that's another potential rejection. So we'll watch that. It's at 202. The next level we're going to be watching, if it can break that, is moving up into 209 and breaking above the 50 exponential moving average. Because then we're starting to get real positive momentum built here. Now we're still sloping down on the 30 and the 50, but the 10 is starting to crank back to the upside. So that's positive. Short-term momentum here on the 4-hour is maxed out at the 100 level. That's totally fine because if we look back in history on this same scenario right here, after it bottomed, right here you can see it ran up, maxed out at 100, and stayed here for multiple 4-hour candles. It was just rejecting off of this $2.60 level, unfortunately. Now, when we turn on the midterm momentum, that is also coming along with it. That's even more bullish. So when you have both of these maxed out at 100, boom. The white line, midterm momentum, carries a significant amount of weight as opposed to the short term. So this is very positive. We're seeing some real volume coming in here on the 4 hours. We look on the 1 hour. This is looking actually really good here, guys. I mean, in the next 3-4 hours, we can see that the momentum of the exponential moving averages are finally flipping back bullish. So what I mean by that is this. So let's go look where they flipped bearish finally. So right here, the 10 rolled over first, then the 30 overlapped, and then you have 10, 30, 50 all sloping down. Right here, the 10, 30, 50 were in bullish posture, even though it didn't last long. But right now, the 10 has just flipped over the 50. The 30 is coming in. I bet you if we look at the 30-minute, obviously, boom, right here. This is extra bullish here, guys. This is bullish, right? So we have orange, 10, yellow, 30, 50. Now they're starting to slope up as well. So that's going to be very positive there. Long-term momentum. This is day trading stuff here, guys, though. Like, this isn't, oh, we're back in the bull market, because that's not it yet. We're not officially confirming that we're out of this small little blip of bear market. Let's look at the 15-minute. So let's look at some targets here. If we can get up to the 1100 exponential moving average on the 15-minute, which is at $2.15, very positive. The 10-minute is at $2.08. The 5-minute, we got above it. Now, here's where I would consider this lower level time frame bullish. Once the 50 exponential moving average crosses above the 1100 exponential moving average. So price action is above it. 10 exponential, that's like excitement. It's not ready. Official is when the 50 breaks above it. Now we're having some real momentum. And if we look at this 5-minute, short-term momentum has reset, almost finished down to zero. And once it does, it'll have an opportunity of coming back up. And then I would see a 206, that spider line that's right above us. I'll be watching for that. But anyway, that is some really low time frame skills there. You can learn those as well in our classroom. We do have technical analysis. We have an entire course built for you, how to read the charts, if that's something you're interested in. But let's go look at Bitcoin as well. So as we see here on the hourly, we've climbed out of this supply and demand zone, which is positive. We're starting to make that flip to bullish here. We're flipped to bullish on the long-term momentum wolf pack. Last time it was a quick, rip and dip. We need to stay positive here. And if we take a look, last time this broke through, the 10 crossed the 30 and the 50, but the 30 did not cross the 50. So that is the final confirmation. So we're not there on the 1 hour. On the 30-minute, we're officially on this short-term bullish pattern. So what we could see here, price coming back down, retesting off of the breaking out of the supply and demand right here, also coinciding with the retest of the 10 exponential moving average, coming back like 85, 561, and then watch for it to push up from there. So on this 30-minute, we probably have to have a cycle back down to zero on the short-term momentum wave, which is the shaft trend cycle. Same settings, the 10 and the 30. That'll come back down and make a push. Because look right here. These came up. Short-term momentum has a dip, and then it finally short-term comes back up to meet that white line, and that's where the real price action movement comes in. But yeah, so Wolfpack indicator is bullish on 30 minutes, bullish on the 1 hour. This is on Bitcoin. It's about to break through on the 90-minute, the hour and a half here. And then look, fair value gaps are right here above us. It just dipped into one. So on this price move to the upside, it just cleared into one fair value gap. There's one all the way up here, which would be nice to get to 91,000. Let's look at XRP. Oh, we got some good ones here for XRP. This is on the 90-minute chart. We've got one here at $2.09, which that's the one we've been talking about. If we can get to 209, that's going to be pretty positive for us. But then you get all the way back up into our 228 spider line. There's no fair value gap there, so it could continue pushing through into these levels up into $2.45. Taking a look at Ethereum here on the 90-minute, it came down. Look at this. It came down and cleared a bunch of their fair value gaps. Let's look at a larger time frame here, 12-hour. So there was a pretty interesting tiny micro fair value gap that it didn't fill all the way down here at $2 and or $2, $2,641. It cleared all these other ones on the way down though, but it left some good ones for the way up as well. So look at the daily. I'll check this out, guys. So look at the fair value gap on the daily chart. This whole thing was a fair value gap. It literally wicked in there, filled the whole fair value gap, and then ran back up. Freaking crazy how good these fair value gaps can work. So let's watch for daily Ethereum getting back up into 32.57 because it needs to go the other way and get all this liquidity to the upside. And if we look at XRP on its daily charts for fair value gaps, there are none. That is unfortunate. The only fair value gap is all the way back up here at 293. So that could be crazy, crazy, very bullish to the upside. And look at this, guys. So look at this craziness. There was a fair value gap all the way down here. So right here, there was a fair value gap from this level of $1.24 down to $1.15. It took out over 50% of that fair value gap. And there's still a little bit left where that wick is. But bam, it came down here, grabbed that liquidity, and ran away. That was on the liquidation day. There are still some deeper ones. Like if we're going to bear market, it could get scary back down to the 50-cent levels. But I'm just pointing those out. But positive, if we start to flip, and this is a bottom, we do have our short-term, mid-term momentum zeroed out. It's ready for a new cycle lift to the upside. Long-term momentum, though, does not look good. 3 days have been zeroed out. They're ready for a cycle to the upside. Weeklies, they're zeroed out. They're ready for a cycle upside. This is great. Weekly, 3-day, and daily all need to reset back to the upside. Let's look at the monthly chart. Monthly chart, this is not looking good, but this does not have to play out. I mean, it always has to play out on shorter time frames. But look at this. Short-term momentum has basically reached the 25 level, so we could bounce here. But mid-term momentum is starting to crack and fade to the bottom. There's 7 days, 21 hours left in this monthly candle. That could, if we can battle back right away and get up into these levels, fill in this fair value gap here. I don't like the monthly. 3-week chart is almost zeroed out. 2-week chart also almost bottomed out. 2-week chart bounced off the 50 exponential moving average. So as I said, we are not bullish yet. We're not bullish yet. The closest thing we are to bullish is the 5-minute. 5-minute is almost ready to go bullish. So as we talked about just a few minutes ago, right, we can see that the cycle has reset basically to zero, and it's starting to make a turn back to the upside. So yeah, 5-minute bullish. There's almost confirmation once the 50 clears that for XRP. 10-minute, watch for a potential rejection on the 10-minute up here at 209. So let's look at the 6-minute. It broke above the 6-minute one. 7-minute, it's rejecting off the 7-minute, trying to break through to the 8-minute. 1100 exponential moving average is what I'm referring to. It's not to the, watch it come up to the 8-minute 1100 exponential moving average, which is slightly above us here at $2.05. The 9-minute is at 207. 10-minute is at 209.